At EisnerAmper, we are creative problem solvers that take a 360-degree approach focusing on you. We're an award-winning firm with decades of experience. EisnerAmper. Let's get you ready.
Hello and welcome to the EisnerAmper Engaging Alternatives podcast series. I'm your host, Alana Margulies-Steinerman, and with me today is Andy Tuchman, partner at Clear Ocean Partners, an investment firm specializing in maritime assets and related energy and commodities markets. Today, Andy will share with us his outlook for investing in those areas, including the greatest opportunities, challenges, and more. Hi, Andy. Thank you so much for being with me today.
Thanks for having me, Alana. Hi.
Absolutely, Andy. So to kick off the conversation, tell us a little about the firm and how you got to where you are today.
Yeah. So we started really taking our first outside capital in 2019. And I'm not sure how familiar you are with maritime markets. Most people are very unfamiliar since it's a pretty niche sector. But when I say maritime, I mean shipping and offshore, things that float, boats, other types of vessels, and on the commercial side. So not cruise lines, not yachts, nothing like that. The maritime market, you can, to just oversimplify, you can categorize it into a few different sectors. There's the container ships, dry bulk ships, which move dry bulk things like coal, iron ore, grains, tankers, which move petroleum products, which are wet stuff like crude oil, gasoline, diesel, all the different types of chemicals and things that come out of refineries. And then you have specialized things like LNG tankers and LPG tankers, car carriers, things like that. But the three main segments are containers, dry bulk, and tankers. And each one of them is really marchers to the beat of their own drum, totally uncorrelated to each other, different players, different markets, different supply and demand dynamics. And getting into being able to transact in this industry is a really high barrier to entry. Number one, because the vessels, the assets themselves are pretty pricey. Number two, it's a very opaque market. Obviously, it's a global market. It's a very non-US based market because of tax reasons and regulatory reasons. You may have heard about things like flags of convenience or ships that have Marshall Islands flags or Panama flags. And some of it's in the news now with all that's going on with Russia and Ukraine and the Houthis and all of that. And so it's a hard industry to break into. And so the strategy that we devise is really to separate the operating of the assets from the purchasing of the assets and the owning of the assets. And what that does is, our first investment was in 2019, we bought an operating company in the tanker side. That operating company doesn't own any assets, doesn't own any ships. It just runs third-party ships. So you can think of it almost like a property manager in the real estate market. Doesn't own the building, just runs the building. It's not a perfect analogy, but I think it's good enough for these purposes. And what that does is it gives you a really asset-light business. It gives you effectively control over a number of vessels. The company we bought is called Womar Tankers, WOMAR. They were running about 22 tankers when we bought them. So you have control of 22 ships. You've got a global reach. They're trading the ships globally, offices all over the world. If you were to buy 22 ships, that could cost you hundreds of millions, if not $1 billion. And so here you're asset light. You're really just running a services company. So it allows you to really punch above your weight in terms of building relationships, gaining access, information, all of that learning, like building those vectors of being able to transact in the future with different shippers, with brokers, with other ship owners. And so that was our first step into the shipping markets. Once we bought that company in 2019, that gave us a platform to then raise asset funds. And so subsequent to that acquisition, we started raising funds to actually purchase tankers because we thought it was an opportune time to be buying ships. And so we raised our first fund in 2021, another in 22, another in 23. So we raised 3 tanker funds altogether. And then we wanted to repeat this playbook in other sectors of the maritime space. And so in 2024, we built out a dry bulk operating platform as a joint venture from Omar. And then we also acquired a controlling stake in an offshore service vessels platform to do the same thing in the offshore service vector. And offshore in this context means the ships that service offshore oil and gas drilling and exploration. And so, those big drilling rigs, you may have seen Deepwater Horizon movie. Each one of those drilling rigs, there's an armada of ships that support them. And so 2024, we built out dry bulk, we bought offshore. We also raised our fourth asset fund to buy offshore vessels. So to date, we've had 4 asset funds. We now have 3 operating platforms, and we view the operating platforms really as permanent capital, and the asset funds as opportunistic capital.
Andy, given your focus on investing in maritime assets, love to hear your high-level outlook for this year in the space.
So as I alluded to in the last question, all the different maritime markets are uncorrelated to each other and really to anything else. A lot of people think that tankers are correlated to the price of oil, but they're not. Even offshore service vessels, which service the oil industry, are not really correlated to the price of oil unless you have huge moves in the price of oil. And so because we can look at these 3 different markets and we hope to expand in the future to other sectors as well, there's really always an interesting dynamic happening somewhere in these markets. So right now, as I mentioned, we bought tankers in 21, 22, and 23. We actually sold a bunch last year in 24. We'll probably sell some more in 25. And we're looking to now buy additional offshore vessels in addition to the ones we bought in 2024. So we are about to start raising a 5th fund, which will be our second offshore vessel fund. And we're also going to launch a 6th fund, which will be a dry bulk fund. So we see offshore and dry bulk as the more attractive sectors right now. That's where we want to be buying, and tankers as in more of a harvesting phase. That's where we want to be selling.
Andy, as a follow-up to what you just mentioned about what you're going to be investing in, love to hear more details on some of the specific greatest opportunities you see in those spaces and why.
The opportunities, as I mentioned, we think really right now are the offshore and the dry bulk space. All shipping spaces are highly volatile in terms of their earnings. If people are familiar with like the S&P 500, S&P has a mid-teens volatility. Shipping has like a triple-digit volatility. So it's an order of magnitude more volatile than, say, standard equities. What that means is there's lots of opportunity if you just give it enough time. And so right now, dry bulk and offshore is where we see the most opportunity. One of the biggest opportunity we feel is not necessarily in purchasing these vessels, which of course we want to do, but it's in bringing new kinds of capital to our funds to be able to participate in this. Shipping markets are typically inaccessible to the average investor. They're really dominated by wealthy families, sovereign companies. There's several public companies, but they're not that large. And so it's not really made for institutional investors. I mean, because of the volatility, because of the opaqueness, because of the global jurisdictions, and there's different kinds of idiosyncratic risks that institutional investors are sometimes hesitant to take. It kind of sits outside the box of where institutional capital easily flows. But it is perfectly made for family offices, for high net worth individuals, for RIAs, for wealth management firms. And that's where we're really trying to build more partnerships and bring these opportunities, which we find very attractive, to these types of investors that we think it's well suited for, who haven't had the access to it.
Andy, on the other hand, what are some of the greatest challenges you face in your space and why?
So the 2 biggest challenges in shipping right now, they're both pretty topical to anyone following any sort of financial markets. One is geopolitical and one is environmental. So geopolitical, as we've seen in the last couple of years, things can change on a dime that totally rewire supply chains, shipping routes, who you can trade with, what kind of ships you can trade with, where you can go. These things are huge risks that can totally turn markets on their head, and there's really no way to predict them. All you can do is try to build an environment for yourself and structure your investments in a way that you can survive downside surprises. So for example, when the Houthis started firing missiles and closed down the Suez Canal, pretty much all Western ship owners and operators had to reroute all their ships. Even if they were already on their way through, had to turn them around, go all around Africa. And they already had agreed to prices to deliver these goods. So it was all on the expense of the ship owner to do this rerouting, which is a pretty big expense. And if you're over levered, if you're not managing your cash correctly, something like that can turn you upside down financially when it's really only a temporary thing. And so what we try to do is insulate ourselves to these short-term fluctuations such that not only do they not permanently disrupt our investments, but they actually provide us with opportunities to deploy capital when other ship owners are struggling during these one-off events. The environmental stuff is more well known in terms of ability to know what's coming, but there really isn't as much certainty because a lot of the guidelines get extended year after year. A lot of them are subject to what's happening politically in different countries, particularly obviously the U.S., which holds a lot of weight, and the EU. And so, there could be a 2030 net zero target, say in the EU, and if that all of a sudden gets pushed back 5-10 years, dramatically alters all different kinds of companies and how they're planning to use oil and gas. And so all these political things are also pretty tough to handicap. The one thing we've seen in the last 5 years is really all of these plans, whether they be reductions or tariffs on fossil fuels or carbon credits or whatever they are, they seem to get perpetually delayed and perpetually underdeliver. And so what that does is that gives fossil fuel assets a longer lifespan. And particularly that makes older fossil fuel assets more attractive, because if people are thinking an asset is going to age into obsolescence in 1, 2, 3 years, if all of a sudden it's available for 4, 5, 6 years, you're doubling the lifespan, you're doubling the revenue, the income, as opposed to say a brand new asset, which might have 30 years. If you're only adding 5 years to that, it's less of an impact. So one thing we've tried to do is find underpriced older assets, which create a lot of optionality to the environmental risk reward paradigm.
Andy, we've covered a lot of ground today and wanted to see if you have any final thoughts you would like to share with us.
Only final thought would be, we're really trying to grow our investor base. We're trying to bring more investors into our umbrella. So as you mentioned, we'll be at iConnections in Miami later this month. We'll be launching our 5th fund and 6th fund, offshore fund and dry bulk fund this year, as well as a special opportunities fund for the more niche things that cross our plate that don't fit neatly into an asset fund box.
Andy, I wanted to thank you so much for sharing your perspective with our listeners.
Thanks so much, Alana.
And thank you for listening to the EisnerAmper podcast series. Visit EisnerAmper.com for more information on this and a host of other topics. And join us for our next EisnerAmper podcast when we get down to business.